Well, look, I think that we had a great interview just last week with Sam Altman and with Jensen Huang, with John Ford, and it did seem like there were a lot of people who felt, wait a second, NVIDIA's given a lot of money to them, and then NVIDIA's going to get the orders back. Of course, now this eliminates that ridiculous theory that we had to deal with all last week. I think it says that the total addressable market is much bigger than people say. They need, look, Sam Altman must think they need every single chip out there in a way to be able to block everybody else. It does say to me that this is going to be a much larger market. We should stop worrying about China. We should start thinking about the ultimate size of what's developing here.
That may very well be. The question is where you think all of this money ultimately comes from. You know, we talked about this idea of vendor financing last week, and there were some people who sort of poo-pooed that. Then you start to look at this kind of deal today, and you start to say to yourself, okay, maybe this is a vendor financing situation, just sort of uniquely so, where you have one competitor financing another.
Well, I think they're going to say today when we interview them that that's just poppycock, that the real issue is they're going to make a fortune. And they have enough money to pay for it. I know nobody really believes that. That's where I'm coming out. Again, I think that the skepticism here is running so thick that the people who are betting against this or think that it isn't real or think that it's one or the other, zero sum, and thinking that Sam Altman doesn't have the money, these people are just going to be left behind. These are people who are perma-bears who don't realize it's an industrial revolution. I know that I'm a minority of one on this other than Jensen, but last night, when you talk to Lisa Su, you don't feel it's just going to be Lisa Su, me, Jensen, and Sam Altman. And we got to stop it with the negativity on this thing. This thing is huge.
But where does the cash come from? Because if you do look at the financials, to the extent we have any, of OpenAI, they don't have the amount of money that they are committing effectively to buy all of these chips. It just doesn't exist yet.
But you take a look at the time frame of this 5-year deal, and you have to bet that they will have the money. The vendor fans, look, everyone's fascinated by Nortel. People got to go back to what happened in Nortel. The people who are fascinated by it, they're children. They weren't there. They didn't live it. We were at the meeting where Nortel dropped the bomb. Can we stop that already? This is huge. And it has to do with the fact that this is going to be big and that OpenAI is going to have the money. Why? Because of the business they're going to do, because I believe in the 2028, 2029 theory. Lisa Su's been saying that this is going to happen. I think the question is how much more powerful, yes or no, the MI450 that Lisa has versus what Jensen has with the Vera.
By 2030, Nvidia is expected to be worth $10 trillion, a 122% increase from its current market value of $4.5 trillion, according to technology expert Beth Kindig. The market for AI accelerators is dominated by Nvidia, which has a significant competitive advantage thanks to its vertical integration of software and hardware. As attention shifts from digital applications to real-world use cases like robotics and driverless cars, Nvidia is well-positioned to continue leading the AI infrastructure market. According to Beth Kindig, a technology analyst at the IO Fund, Nvidia will reach $10 trillion by 2030 at the latest. From its current market value of $4.5 trillion, that is a 122% increase. She is not, however, the only expert who believes in the chipmaker. According to Form 13F, a number of billionaires from hedge funds made large purchases of Nvidia stock during the second quarter. Citadel Advisors' Ken Griffin purchased 6.1 million shares, representing a 922% rise. The second largest holding in his portfolio is Nvidia. Coatue Management's Philippe Lafon contributed 2.9 million shares, a 34% gain. The eighth largest holding in his portfolio is Nvidia. Appaloosa's David Tepper purchased 1.4 million shares, a 483% increase. The seventh largest holding in his portfolio is Nvidia. Crucially, those hedge fund managers have excellent performance histories. Over the past 3 years, their portfolios have outperformed the S&P 500 by 38 percentage points, with the weakest performing the worst. Since that is no small accomplishment, investors ought to think about adopting Nvidia's strategy. The graphics processing units, GPUs, which are processors made to swiftly complete numerous repeated calculations, are Nvidia's most well-known product. GPUs are better at rendering computer visuals and speeding up artificial intelligence, AI tasks, than CPUs are at running operating systems and apps. With over 90% of sales, NVIDIA GPUs are the industry standard for AI accelerators, and many analysts predict that the business will continue to hold a significant portion of the market until 2030. We anticipate that Nvidia's dominant technology portfolio, lengthy history of innovation, and substantial growth-oriented investments will propel robust acceleration growth in the upcoming years, according to TD Cowen analysts. But Nvidia's edge over competitors goes beyond producing the quickest GPUs for data centers. Because of its vertical integration, the company is genuinely unique. Nvidia creates rack-scale data center systems by combining its GPUs with CPUs, networking hardware, and interconnects. Additionally, the company curates CUDA, a robust ecosystem of software development tools. In a note to clients last year, Beth Kindig noted those components of its business. Because of its quick development pipeline, the CUDA software platform's impenetrable moat, and its status as an AI systems firm that offers components far beyond GPUs, such networking and software platforms, we predict that Nvidia will reach a $10 trillion market cap by 2030 or before. As attention moves from digital applications to physical use cases, Nvidia is in a strong position to continue leading the artificial intelligence infrastructure market. In the upcoming 10 years, physical AI, such as robotics and driverless cars, will transform the world economy. And Nvidia gives developers and engineers the gear and software they need to create those things. In his keynote address at GTC 2025, CEO Jensen Huang stated, "We develop technology that practically all self-driving car companies use." For example, Waymo from Alphabet uses NVIDIA platforms to train models in data centers and power decision-making in the robotaxis itself, while Tesla trains models in data centers using NVIDIA GPUs. Additionally, NVIDIA develops the technology used by the majority of robotics businesses, particularly Foxconn, Boston Dynamics, and Tesla, which produce humanoid robots. Additionally, NVIDIA technology and software are used by Amazon, the world's largest maker and operator of industrial mobile robots, to coordinate and train its fleet of robotic vehicles throughout warehouses. According to Grandview Research, until 2030, spending on AI-related hardware, software, and services would rise at a rate of 37% each year. It's possible that NVIDIA's earnings and revenue growth will keep up with that rate. Indeed, the current valuation of 54 times sales appears to be rather reasonable, given Wall Street projects earnings to expand at a rate of 36% per year over the next 3 years. I believe that by 2030, NVIDIA will be worth $10 trillion, therefore patient investors should look about acquiring at-any stake now. Over the past 3 years, NVIDIA's stock has performed exceptionally well. Investors would be forgiven for believing that NVIDIA lacked the momentum to keep rising after such a run. Nonetheless, NVIDIA obviously has a lot of potential to grow if the market opportunity is as big as its management anticipates. Jensen Huang, the founder and CEO of NVIDIA, said during the company's Q2 conference call that he anticipates $3 trillion to $4 trillion in data center capital expenditures worldwide by 2030. Given that amount will be roughly $600 billion in 2025, that represents a significant rise in only 5 years. Even after its incredible run, investors should be buying NVIDIA stock in droves if this forecast comes to pass. Graphics processing units, GPUs, which are computational devices capable of doing several calculations at once, are manufactured by NVIDIA. Because of this, they are perfect for demanding tasks like processing engineering simulations, mining cryptocurrencies, and training artificial intelligence models. Due to the superior quality of its GPUs and supporting software, NVIDIA has achieved a 90% market dominance in the data center GPU industry. In the IT industry, such domination is uncommon, and it demonstrates how superior NVIDIA is to its rivals. Being the leading brand means that when management makes a big prediction, like they did during the conference call, investors should listen. At the moment, there is a greater demand than supply for NVIDIA GPUs. Because of this, it's likely that many AI hyperscalers communicate with NVIDIA regarding future demand well before they ever buy the GPUs. In this manner, they can guarantee that the GPUs will be accessible when they're needed. Furthermore, data centers are not created overnight. An AI hyperscaler must first purchase the property, then design the facility, construct the facility, and finally install the GPUs when they announce a new data center project. Since this is a multi-year process, it is even more crucial that businesses collaborate with Nvidia to inform them of their demand far in advance of the time when they will actually require the GPUs. Investors should thus think about what that would mean for Nvidia's stock when the company's management talks about the enormous demand that is still coming. It's safe to assume that Nvidia controls around 1/3 of all data center capital expenditures, as Wall Street analysts predict the company will make $206 billion this year. Nvidia could make over $1.17 trillion in revenue if it maintains this market share through 2030, and data center construction expenditures total $3.5 trillion. Over the last few quarters, Nvidia's profit margin has been above 50%. It would make $583 billion in net income if it could keep up that solid margin profile. That would undoubtedly make Nvidia the world's most lucrative corporation, but it would also have a significant impact on the price of its stock. Assigning a comparatively low 25 times earnings multiple to Nvidia would result in a $14.6 trillion market capitalization. With its current market valuation of $4.6 trillion, Nvidia would have experienced a 217% gain. A 217% return over the following 5 years would still be an amazing run and make Nvidia a must-own stock, even though it isn't as strong as the company's stock has been in recent years. Even if Nvidia slightly misses the mark on all three of these projections, the overall trend is toward more capital expenditures in data centers, and Nvidia is among the best-positioned companies to capitalize on this trend. However, for this to happen, Nvidia's market projection, market share, and profit margins must pan out. Every year, automakers incorporate increasingly sophisticated safety and semi-autonomous technologies into their vehicles, making them smarter overall. These elements are being incorporated into cars of all kinds, including combustion engine vehicles. However, because EVs are software-based vehicles, they are particularly well-suited for cutting-edge technology. For Nvidia, a leader in artificial intelligence, AI, this is opening up a major opportunity. As electric vehicles grow more prevalent, a huge opportunity for Nvidia's artificial intelligence technology to power the next generation of EVs is becoming apparent. The business has been developing automotive technology solutions for years. Nvidia spent years creating technological platforms and systems for automobiles, with the hope that they will eventually be included into sophisticated car systems. We've already reached those times. Leading electric vehicle manufacturers are using Nvidia's AI vehicle processors, Drive Orin and Drive Thor, and its artificial intelligence platform, Drive AGX, to improve safety features, in-car software, and semi-autonomous capabilities. For instance, BYD, the biggest EV manufacturer in the world, teamed up with Nvidia a few years ago to employ the company's centralized computing platform to launch intelligent and safe cars. Similar to this, Xiaomi EV, a Chinese company, used Nvidia's Drive Orin setup to build its SU7 car. It also uses AI to make navigational decisions in unfamiliar driving situations. Additionally, American businesses are utilizing Nvidia's drive technology. Rivian, an expert in electric vehicles, uses it to improve its driving technology and safety features. It also employs Nvidia's RTX Pro GPUs to power virtual reality and artificial intelligence for car design. Most recently, General Motors revealed a new collaboration with Nvidia, stating that it has previously trained AI using the tech giant's graphics processor. The partnership is now being expanded to include in-vehicle hardware and even help with the design of automotive operations and plants. Regarding the collaboration, Nvidia CEO Jensen Huang stated, "With GM, we're revolutionizing transportation, from cars to the factories that produce them. The era of physical AI is here." This hardly scratches the surface of Nvidia's software and hardware integration into semi-autonomous safety systems in electric cars. Nvidia's CPUs and drive platform are used by over 20 automakers to power their next-generation automobiles. The growing adoption of Nvidia by automakers to power autonomous vehicles is one of the company's greatest prospects from next-generation automobiles. When discussing its future plans for its own automobiles and its anticipation of introducing personal autonomous vehicles, or PAVs, in the future, GM made this point quite evident. "The work we're doing with companies like Nvidia adds agility to our already highly sophisticated vehicle design, engineering, and manufacturing processes," stated Dave Richardson, Senior VP of Software and Services Engineering at GM. A new full-stack drive autonomous car platform launched by Nvidia is currently in full production and will soon be integrated into intelligent transportation systems. In summary, Nvidia's technology may contribute to the development of these novel autonomous systems. And there is a huge opportunity. According to Ali Kani, Vice President and General Manager of Nvidia's automotive division, the company sees the automotive sector as a trillion-dollar opportunity. The business is still a ways off. Although its Q2 automotive revenue was only $586 million, it was an outstanding 69% increase over the same quarter last year. However, some projections have the global income for autonomous car platform providers close to $2.6 trillion by 2030, which presents Nvidia with a significant opportunity. Nowadays, the majority of new cars, whether electric or not, are equipped with some degree of semi-autonomous technology. Nvidia is well positioned to profit from the expansion of in-vehicle technologies for EVs and the increasing prevalence of these features thanks to its present partnerships and technology. Investors can profit from buying Nvidia stock now, while they wait for the firm to gain from powering next-generation automobiles in the upcoming years, given that it is already a dominating artificial intelligence company that is capitalizing on the enormous demand for AI data centers. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.